There was a collapse in stablecoins. About 100 billion evaporated. The most, because it was decentralized, it wasn't much, it wasn't all in the United States. So the regulator, while being unhappy, it's not a domestic problem. It was based on bankrupt ideas, the idea that an algorithm could somehow stabilize a coin against the US dollar. That's proven to be false.
Hey guys, welcome back to Library of Wealth. Today we have Shark Tank investor and Canadian businessman Kevin O'Leary discussing the recent changes in crypto and how he's moving his assets to strengthen his multiple positions in the market. With inflation fears, as well as a slowdown in earnings, O'Leary is now making adjustments to his crypto portfolio. He advises retail investors to go for large cap projects such as Bitcoin, Ethereum, and Polygon, and explains that it's impossible to pick the bottom. He warns that in the current economic climate, you will need diversification because at the year's end, returns on crypto trading will cause substantial maneuvering on projects that didn't recover. Let's check out this interview with Kevin O'Leary as he gives his position in the crypto market, as well as what we can expect in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
We've had lots of pundits, Jamie Dimon lately calling it decentralized Ponzi schemes. He was speaking specifically to stablecoins, I believe, in that statement. However, at the same time, this bill called the Stablecoin Transparency Act is making its way, it's getting close to markup. And the reason it's interesting is it only does one thing. It only deals with stablecoins that are regulated and backed by the US dollar, nothing else. It's not trying to solve for NFTs, doesn't care about Bitcoin. It's basically going through legislation on a bipartisan basis as a payment system. And the reason you should be optimistic for this is why both sides of the aisle support this is it basically overnight, should it get regulated, creates the very first global payment system backed by the US dollar, making the US dollar the default payment system globally. And it will be adopted by every country except North Korea, Russia, and China. And overnight, it will make America even a stronger nation in terms of settling for financial services. So it'll be the very first crypto policy that passes probably sometime after November 8th. But everybody in here should be optimistic about that because that signals the onslaught of more regulation that will deal with other digital commodities like Bitcoin and everything else. I think one of the great promises of Web3 and why we're all here today is that Web3 should signal the mass adoption of blockchain technology. And all of the dollars that are going into Web3 development are trying to do that, solving for the security of wallets, the ease of use of wallets, transparency of the chain, making it adaptable and easy to use. And the killer app, I would agree with you, would be a downloadable app that would let me store my USDC or whichever stablecoin I choose to use as a payment system and allow me to use that anywhere in the world, in the countries that have adopted it, with a fraction of the friction fees. Imagine a credit card is 350 basis points. ACH transfer fees, SWIFT system transfer fees, all those fees. Now, you wonder why Jamie Dimon is trying to talk this down. I mean, this is threatening his book in a big way. And so just payment systems alone are going to really cause some headaches in banks because they love to transfer assets between themselves and charge you friction. Their gas fees are crazy high. And so this is the disruption and the potential. And I'd argue, you know, to this Voyager story and all of these guys that have gone bankrupt, let me all offer an alternative view. It's a good thing that that happened. And it scrapes the patina off the market. It eliminates the idiot management. They'll never get financed again. The ideas that were bankrupt in the first place will never come back. The market remembers losses of 60 billion. And so when you take out the weak managers, the people that didn't understand leverage, the idiot managers, the ones that really were rogue in the sense that they were just doing it for nefarious reasons, you're cleaning the palette. And what's left with is opportunity of stable opportunities like Circle and others that are doing it the right way, and FTX and all these other companies that are raising capital the compliant way. So I'm optimistic that over the next 24 months, should we get some regulation, the spigot of institutional money will come pouring into this space.
With such low earnings, O'Leary sees the dropping value in the crypto sector. He says the economic positions in Bitcoin and Ethereum are decentralized all over the world, so it's not just American investors exposed. O'Leary also goes on to discuss how the concerns of a recession are affecting global markets, not just in cryptocurrency, but in the stock market, oil, and the value of the US dollar.
Many investors see this disruption coming in the next 2 years. So these banks are going to have to figure out how to adapt to this and compete with it. And the best way I'd say is, I believe that the sector will be the 12th sector of the S&P in 10 years. So what's going to happen is financial services is a really big sector of the S&P. Some portion of that value is going to get transferred over to blockchain, the 12th sector, which doesn't exist yet. So you have to decide as an investor, there's two risks in investing in crypto. One risk is you invest in crypto. It's volatile, it goes to zero, could happen. The other risk is you don't invest in crypto and all that asset value transfers over the next 2 to 3, 4, 5 years into blockchain, which is now providing some portion of financial services. You got risks both ways. I've chosen to invest in crypto and blockchain and many, many projects, including I'm a large shareholder of what Ben is doing here because I can invest in that company and it's regulated. I got no rogue anything. There's no Kim Kardashian SEC charge there. That's not going to happen. This is a regulated business in a market that's very advanced. The Canadian OSC, which is equivalent to the SEC, gave this guy an order that he is now allowed to have 1 million Canadians trading on a broker-dealer crypto platform, and starting the beginning of the next year, fractional shares of equities. So in one account, you can have everything you want. You can have equities, fractional shares, real-time quotes, crypto, 40 different tokens and coins, right?
Yeah.
All regulated by the regulator.
Right, and regulated staking coming out soon, which will be the first in North America.
That's the first ever, yeah. There was so much anticipation back in Miami just over a year ago about regulation coming and an opening up of global markets, pension plans, sovereign wealth funds coming into crypto, and obviously none of that has occurred. And that is actually why we're in a rut that we are right now. It also remains a huge opportunity. There is 2 points of light that I think people should think about that look interesting right now. There were a lot of bills coming forward, bipartisan bills in the House and the Senate about trying to regulate crypto. Now it's consolidated down to 2 initiatives. They're both bipartisan. One is very important. Since we last talked, there was a collapse in stablecoins. About 100 billion evaporated. The most, because it was decentralized, it wasn't much, it wasn't all in the United States. So the regulator, while being unhappy, it's not a domestic problem. It was based on bankrupt ideas, the idea that an algorithm could somehow stabilize a coin against the US dollar. That's proven to be false.
O'Leary believes that his strategy of having 20% of his working company's assets in crypto distributed throughout 32 different positions will pay off with massive gains in the next year. Because he believes there's no safe position in the market, many investors are just treading water. In the meantime, O'Leary continues to buy S&P 500 companies that are profitable and have a high return on assets. With China, Japan, and Ukraine currently having economic struggles, he sees this as a market opportunity to buy at the bottom after a 30 or 40% downdraw on the stock price. With a massive change in the direction of capital going into crypto in the last 6 months, more investors are willing to take highly speculative investments. What do you think about Kevin O'Leary's strategy in the crypto market, as well as where he predicts we will be over the next few months? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.